Good morning, everyone. This is Todd Brow with Senior Insurance Marketing, and we are excited to have Jim Codney with Cigna to talk about the new launch of Medicare supplement in California, and also the cancer, heart attack, and stroke. And good morning, Jim.
Good morning, Todd. Thanks for having me. Hi, everyone.
So, Jim, I was just looking at the calendar. 16 days from today is the kickoff. Can you believe it? Of AEP.
Yeah, it's the year's going fast, which is weird with the pandemic and all the stuff we've been going through. But it's an exciting time, especially in California for us here at Cigna.
Yeah. Hey, tell us more about California and the exciting news that's going on in California with Cigna, Jim.
Sure. So I'll go ahead and get started. We're going to talk about our Med Supp launch first, and then the changes that we've had on the cancer, heart attack, and stroke. Before we do that, just want to talk really briefly about our mission at Cigna. I think it's really important. You know, when I was out selling for a company, I wanted to know what that company thought was important. And so our mission at Cigna is pretty simple. It's to improve the health, well-being, and peace of mind of those we serve by making healthcare simple, affordable, and predictable. And really what that means is we're focusing on healthcare and not sick care. We're trying to help our end consumer live a more healthier, active life. And when they do that, obviously their quality of life is better. We also have seen that when they do that, typically they aren't making as many claims, which is good for us. And then finally, when they aren't making as many claims, our rates are able to be as stable as possible, which is good for our agents and then the end consumer. So it's a nice cyclical thing that we're trying to really focus on here at Cigna. So let's talk about Medicare supplement. Anybody on the call that's been in California selling Medicare supplement very long, most of the states, Cigna hasn't been that competitive for a while, for a few years. And so we are very excited to just launched CHLIC there, or Cigna Health and Life Insurance Company, here within the last month or so. And we're seeing some really good results. I was very pleasantly surprised with how competitive we are in California, which I'll show you today. But let's talk about some basic highlights. You know, you've got the Cigna brand. Instead of Loyal American that used to be in California, it now is Cigna Health and Life Insurance Company. That just builds that familiarity and that comfortableness of a brand that your clients are going to know right off the start, because the Cigna name is in the company. You don't have to say, oh yeah, Loyal American is a subsidiary of Cigna. We have a really neat new discount platform. So it's a two-tiered discount. We've done some things with commissions. On Loyal, we used to charge interest on advancing. We don't do that on CHLIC. And then we have things like Active and Fit, Healthy Rewards, some really good stuff. So let's get into sort of the product. This is the brochure for California. Anytime you need brochures, you can just go on Agent View. You can either download them or you can request them to be printed and shipped to you at no charge. And so I brought up our two-tier discount. And I'm going to take a little more time than normal on discounts because this is a little unique in the industry. I don't know of any other carrier out there right now that's doing a two-tier discount. So we used to do a 7% discount if somebody else in the household also had a Cigna Medicare policy. Well, what we decided to do is two-tier that discount. So now we have a 6% discount just for living with somebody 18 years or older. So we've done some analysis and found that over 80% of our policyholders should qualify for this discount nationwide. So it's a really nice discount. Again, the other person doesn't have to have a policy with us. They just have to be 18 years or older and live in the same household. And if they do, we're going to give them the 6% discount. So this slide just shows you the power of that discount. You know, let's say we have a plan in Area 1. It's only $100. but take 6% off of that, that drops it down to $94. It doesn't seem like a lot, but obviously different plans, different ages, different area factors. What if that rate was $150 or $170 a month? Now you're $10, $12 a month different, and it really helps. And then this is our household discount. So in California, if a client lives with somebody in the same household that also has a Cigna Medicare policy for Medicare supplement, they're going to get an 11% discount. So that makes a big difference, obviously. And the other person would also get a discount, but that would depend. If it was a loyal policy, it'd be a 7% discount. If it's also a new CHLIC policy, that other person, it'd get the 11% discount. And so this just illustrates the difference, right? You start at 100, that 11% discount takes you down to 89 bucks a month. So very, very affordable for clients who can qualify for that. I think it's going to be a really great AEP for us in California. Once I show you the rates, hopefully you'll think that as well. So speaking of rates, here's our Plan N rates. Now, as we've seen with MACRA, some of the changes in the market, you know, Plan F only to people that were eligible prior to January 1 of this year. Plan G is now the plan that has to take the Medicare guarantee issue, those 7 trial rights, etc., or 7 GI rights, pardon me. I think Plan N is going to be huge here, you know, not just this year, but for the foreseeable future. It's going to be what I call the new G of the last couple of years. But if you look at our rates in California, we took these rates right off of CSG actuarial. So if you look at our rates in Area 1, you do have the ARP rate a little lower than us, about 75 cents lower than us a month. But then if you look, our 11% discount is there, our 6% discount is there, and our standalone rate are all the 2, 3, and 4 rates in Area 1 for Plan N at 65. So as you see, if you look at 70, our rate, if you can get them with the household discount, female is the best rate. Even on male, we're really competitive. So again, I'm super excited about the rates we're able to offer. So this slide is going to give you a little more idea of statewide. When we built this presentation, the hope was, hey, let's not just give a best area factor, or lowest area factor view of the state. Let's show our agents at 65, female, non-tobacco, what the rates would be wherever they may live. California is a big state, so there's 4 area factors. So as you see, at female 65 non-tobacco Plan N, you know, the rates with the household discount are 89, like we showed. In Area 2, 91, Area 3, 92, and Area 3, 111. I can assure you all that these are relatively competitive rates because we've done the rate analysis for all area factors for all plans, and I've looked at them, and they are very competitive rates. So here's our G rates. Our G rate, I think, is still right where it needs to be, very competitive. You know, at female 70, we're 157. We're 129 at 65. So again, a really good rate. Puts us in the top 3 or 4 in that area factor. Our male rates are also really competitive. You know, so I'm excited about our G rates. And again, just to give you an idea, this is what it looks like at 70 female in all area factors for Plan G. So again, very, very competitive Med Supp rates. And then for F, so if you do have somebody that still qualifies for an F plan, we know there's a bunch out there. We are relatively competitive on F, especially again, if you look at the G or the F slides, that really shows you the power of the live with somebody or household discounts, right? That 6% is really good, but once you get to that 11% discount, man, what a difference. If you look at your screen now, it takes it from $193 a month all the way at 70 to $171 a month. So very, very strong competitive rate that we've got out there in California. And again, this will just show the F with the different area factors, again at 70 female, non-tobacco. So super excited about these rates. I know Medicare is highly commoditized and a rate driven product. And so when you think of not only the rates that we offer here at Cigna now with the CHLIC brand, but also the name brand, the customer service, the agent support, I believe we are able to offer the full package for California agents for selling Medicare supplements. So very excited about that. We also recently just changed what we require for birthday rule. Guys, I'll be honest, we used to be one of, if not the most difficult company with what proof we needed for birthday rule. But I'm very proud to say I was instrumental in making this change or getting this change to happen with the company. Now, all you have to do is include a copy of either the other company's ID card or policy schedule page. So it's super easy. It's as easy as any other carrier out there and easier than a lot. I did a lot of research, and I'm really happy that the powers that be that make the decisions listen to our agents and our staff, and really we're open to making it easier for you and your consumers to do birthday rule business. Obviously, it's a huge part of the business you do in California every year. Also, I'm in Arizona. I was just in California for vacation. I love California. I was in there with my wife about a week ago, and I know there's still some areas that are really locked down and some that are slowly opening up. But we're really good with phone sales, guys. If you've never done a phone sale with us, I will tell you our phone sales are as easy as there are in the market. Basically, what you do is you call your customer and you fill out the e-app. If a phone verification call is required, then you do a phone verification and then you submit the app. It's really, I know that sounds too easy, but it's really that easy. And I'm a very straightforward guy. Our e-app is one of, if not the best e-app in the industry, especially if you're somebody who cross-sells. But even if you aren't, let's say all you're selling with us is Med Supp, our e-app is really good. So if you have not tried it yet and you've been thinking about trying an e-app, next time you have an opportunity for a Cigna policy, consider using our e-app. And this is just going to show you when the phone verification call is needed. So if it's open enrollment or guarantee issue, the only time you have to do it is if you're selling over the phone or by fax and not getting a wet signature. So if you're selling either in person, getting a wet signature, or through our e-app and having them go through the e-app with you, you don't need to do a phone verification call. Now, if you are selling somebody underwritten, you do, no matter how you sell, you do need to do that. But I promise you, it's a really easy process on the, you guys are lucky because of birthday rule. It's not going to be, in most cases, a big part of your business. But if it is, no problem. We're able to help you out. We'll take care of that. And we do a really good phone verification call. And last but not least, I know some people may live or sell in California and they also sell in other states. So just wanted to give you an idea of our state availability and what it looks like. As you can see here, the only two states we are not in currently are New York or Massachusetts. As you look at the map, we're really excited. We just started launching a new charter, Cigna National Health Insurance Company. So that's those green states in Indiana, South Carolina, and PA. And we've been extending CHLIC this year, California, New Mexico, New Hampshire, and Vermont. Expect to see that more as we go through 2020, into 2021. Oregon is coming on CHLIC. So if you're in California and you sell in Oregon, we'll have some good news, hopefully early next year for Oregon. So got through the Med Supp. I know I went really fast, but man, I'm super excited about our Med Supp in California again. When you look at the full package that we offer with company name and how it's respected, the rates, the service, the agent support, and everything, I really think we offer a full package, and it's well overdue in California on the Medicare supplement side. So now I'm going to pivot to our #1 selling ancillary product that just got kind of a refresh, and it's a now even more comprehensive than it's ever been before in California. So it's our flexible choice cancer, heart attack, and stroke product, and man, I love it. So what did we do? So we did a couple things. We reduced our look back. We actually cut our underwriting look back in half. And this is why that's a big deal. In itself, it put us in line with a lot of our competitors, right? We went from a 10-year look back to a 5-year look back. But we were able to do that without raising rates to the consumer or cutting compensation to our agents. So I was really happy that we were able to do that. It's a win-win for everybody. But we also added some riders. So we'll talk about these riders later, but we kept all the riders that were there, and we've added a benefit builder rider, radiation and chemo rider, specified disease rider, and accident indemnity rider. So it makes it, as far as I've seen, it makes it the most comprehensive lump sum cancer, heart attack, and stroke product on the market today. So really excited about that. But when I talk about these products, sometimes agents who's never talked about it, they ask me about, man, is there really a need? I don't know if I believe that there's a need. And so I always pause on this slide to try and drive home the need. If you look in the bottom left, 40% of men and 38% of women will be diagnosed with cancer in their lifetime. If that alone doesn't tell you that there's a huge need for cancer insurance, it's over a third, almost a half of us. And by the way, unfortunately, I've heard those cancer growth rates are raising. I mean, cancer is horrible, folks. I just last week lost my uncle due to pancreatic cancer. It impacts all of us. So huge need there. But even on the heart attack and stroke side, there's almost 8 million Americans that have suffered a heart attack, and stroke is actually the leading cause of disability. Now, before I did this presentation, I would have never realized that stroke is the leading cause of disability. And there's about 92 million people in the U.S. living with some after effects from a stroke, which is very, very common, unfortunately. Slurred speech, loss of really use of an arm, etc. But probably the scariest thing to me is that top middle statistic, that the average person can afford $500 of unexpected costs. Folks, if they cannot afford $500, how in the heck are they going to afford the copays, deductibles, the other miscellaneous expenses, the loss of work, etc., that's often come with a cancer diagnosis or a heart attack or a stroke or need of a heart transplant? Guys, I truly believe we are very fortunate. We're blessed to be in the industry we are, because I look at our industry a little differently than some people do. I believe we're in a service industry. And when we serve our clients by talking to them about the risks of, what if you get internal cancer in your lifetime? What if you have a heart attack or a stroke or need a heart transplant? Do you know financially what that could do to your family? You know, if we do that and we serve our clients from a service standpoint, not just trying to sell them, I believe sales are a natural outcome, right? Because we're coming from a different way. And I believe that's what our best salespeople in our industry do. They've found a way to provide service more than the rest of us. So if you're looking for a different way to go about things, maybe try that. Our policy is a lump sum policy. So as you see, it can be used for anything on your screen now. These are typical expenses that you and I would probably think of if we were sitting around the table and making a list. But guys, I want to tell you, it doesn't matter what your client uses the money for. We don't care. We pay the benefit directly to the insured, or if they pass, the beneficiary, and they can use it for whatever they want. So it doesn't matter what other policy they have in place or don't have in place, if they're on an MA plan, an ACA, a group plan, etc. You know, as long as they qualify for the coverage, we're going to do it. And they could go to Vegas and put it all on black. They could pay for these things, or maybe they could pay for something that you and I haven't thought of. You know, I talked to some people, and what they were planning on doing with the funds is a celebration of life trip with their immediate family. You know, they had their expenses covered elsewhere, but this was important. That was important to them. So all I'm getting at is we don't care at Cigna what they spend the money on because we pay it directly to them. We don't coordinate benefits with a hospital or a health insurance plan. So here's the plan in a nutshell. Their benefits in lump sum anywhere from $5,000 to $75,000. And in California, it's available for new purchase from the ages 18 to 64. Please don't, we try over 65 and California won't let us, which is fine. In other states, if you sell in other states, it's available to 99. And we'll talk about the other riders. But one thing I want to talk about is our underwriting and how easy it is. A lot of other companies out there, they talk about family history and stuff like that. In our underwriting, we do not ask tobacco use, and we don't ask family history. So it doesn't matter if their mom, dad, sister, brother had cancer. Our underwriting questions only ask about them specifically. And then we offer different coverage options. So they could buy it for an individual, a couple, a single parent, or family. And when they do single parent or family, typically it covers children in the household up to the age of 26. So our policy can be sold one of three ways. It can be sold either cancer standalone, heart attack and stroke standalone, or cancer and heart attack stroke together. Now, if you sell them together, what you do is you sell one as the base policy and the other as a rider. It does not matter whether cancer is the base and heart attack and stroke's the rider, or vice versa. It is important to note there are two separate buckets of money. And what I mean by that is your cancer benefit is separated from your heart attack and stroke benefit. So they could have 5,000 cancer and 5,000 heart attack and stroke, or 75 and 75. That doesn't matter. Whatever works for them and their need and their budget. But they can also, because they're two separate buckets of money, let's say they're like my family and they have a family history of internal cancer. So they're more concerned about that, but they do believe they have a need for a heart attack and stroke coverage also. Well, they could, let's say, buy a $25,000 or $30,000 cancer policy and a $10,000 heart attack and stroke policy. Either way they do it, whatever is important to them. That's part of why it's called flexible choice, because we make those choices flexible within this product. Now, our cancer coverage is as simple as it gets, folks. All you have to do is tell your client, if you get diagnosed with internal cancer, Cigna will cut you a check for the full amount, period. So it's internal cancer, first diagnosis, lump sum. So if your client shows, let's say, a $20,000 benefit, they go into the doctor and have that unfortunate, diagnosis. One thing that I love about what we do is when they get that diagnosis, sometimes that's the first time they've really been hit with that mortality, that, I'm going to die someday. Is this going to be what does it? What we do and what this product does is I've talked to people who've had cancer, and their first thought was, instead of how am I going to beat this, it was, what's this going to do financially to my family? So again, this helps offset that. This helps them get past how am I going to pay for it, and helps them get to how am I going to beat this horrible disease. So we're empowering our clients on top of everything else. So really great option to do for your clients. Our heart attack and stroke is a little more involved, so I'm going to explain basically everything. So if your client has a heart attack or needs a heart transplant, we pay the benefit 100%, boom, right there. If they have a stroke, to claim the stroke benefit, they have to have lingering effects for at least 30 days. Now, folks, I want you to know a couple things, because I've had some agents groan when I've done this presentation in person. First thing, that is required by most carriers out in the industry on a policy like this. Some are actually longer than 30 days. Second, as you saw earlier in this presentation, there's over 92 million people in the U.S. that have or they're living with after effects of stroke. So it is not anything where we're trying to avoid paying a benefit. It's a very common thing, and we do a really good job with our stroke benefit. On top of that, the other things we do well is we accelerate some of the benefits should your client have a need. So let's say they go to the cardiologist and the cardiologist says, you need coronary artery bypass surgery. Well, if they have a $20,000 benefit, we're going to accelerate 25% of that, or $5,000, for them to help pay their copays, deductibles, or whatever they need to or want to pay with that. And then we're going to reserve the other 75%, the $15,000, for if they ever have one of what I call the big three: the heart attack, need of a heart transplant, or stroke with lingering effects for at least 30 days. So it's really cool that we do that. We advance 25% for coronary artery bypass surgery, aortic surgery, heart valve repair or replacement, and then we'll also advance 10% for angioplasty or stents. Now, one thing that's important to note, we will only advance once in your client's lifetime. So it's a really great option. What we're doing with that advance of the benefit is we're hoping they never have a heart attack, need a heart transplant, or a stroke, because that's not good for our clients when they have those. Even though we pay them money, they'd rather avoid that, obviously. So we're trying to help them avoid that, those things. So now we're going to get into our riders. So these are our first two riders and some of our most popular riders. We have reoccurrence and restoration. Please don't let the names confuse you. The only difference is reoccurrence is on cancer, restorations on heart attack and stroke, but they work exactly the same. So basically, they buy a policy. Let's say they have cancer and reoccurrence. So they have a policy, and unfortunately, they have that horrible diagnosis of internal cancer. So with the reoccurrence rider, we pay out the benefit, and as soon as they're 2 years from the advice or treatment, or diagnosis and treatment, they build up 25% of their policy again. At 5 years, 75%, and at 10 years, they built that up 100% again. So it's really great. What it does is these make this policy not a one and done type of policy. Now, the good thing about these and why you really, really want them is A, they're affordable for your customer. B, horrible diseases don't work on our timelines. So I've had agents say, well, I just have a client wait 5 years and then buy a brand new policy. Well, that's okay at first glance, but then let's think of the logic. So you're telling a client that's already had a cancer diagnosis to wait 5 years to buy another one. So in 5 years, that cancer policy, if they can qualify, is going to cost more. So are they on a relatively tight or fixed budget, or can they pay whatever they need to pay? But more importantly, what happens to your client if you told them to wait and in 2 or 3 years they get a diagnosis of internal cancer again? Now they're uninsured for that. So again, I always suggest having them have coverage, even at 25 or 75%. It's better than nothing, and those riders are very affordable. You're talking for a $5,000 benefit, a couple bucks a month. I mean, literally a couple bucks. So definitely suggest adding those. We also have a hospital indemnity rider, an ICU rider, a combo of those two, which is a hospital indemnity and ICU, and then a return of premium rider. Our return of premium rider is an at-death rider, but it's a great rider for those people who say, what if I never? Because if they never have a heart attack, stroke, need of a heart transplant, or cancer, we reimburse every penny that back to their beneficiary. Well, even if they have a claim, as long as they paid in more than we paid out, we'll reimburse the difference to the beneficiary. So they cannot lose if they have an ROP rider. So it's a really great rider for those clients that say, what if I never? Now we're to the new riders that just hit California. Benefit builder, radiation and chemo, specified disease critical illness, and accident indemnity. I'm going to spend a couple more minutes on these. Benefit builder, I believe we're the only company in the industry that has a rider like this on a lump sum cancer, heart attack, and stroke product. What it lets them do, I liken this to almost like an inflation rider. What it lets them do is add growth to their policy every year of either $500 or $1,000 to the lump sum. So as you see on your screen on the right, that grows for up to 35 years. So if your client started with a $20,000 policy and had it build $1,000 a year, after 10 years, that lump sum is now $30,000, not 20. And in 20 years, 40,000, and so on. So this is how I would talk to a client if I was out selling this. I'd ask them, is it reasonable to assume that if you got diagnosed with cancer today, it would cost you more out of pocket than it would have 10, 15, 20 years ago? Now, most of our clients are going to say, absolutely, everything costs more today than it did back then. And I would say, well, okay, well, based on your answer to that, is it reasonable to assume if you get diagnosed with cancer 5, 10, 15, 20 years from now, it's going to cost you more out of pocket than it would today? And they're going to say yes, and that's a great opportunity to then offer them this benefit builder. It's a great rider that helps them grow their coverage until they have a claim, till they die, until they lapse the policy, or 35 years. So really nice thing. It is one thing that I don't believe any other carrier has out on a product like this. Then we have radiation and chemo. This is great for any clients that are worried about the out-of-pocket costs of radiation, chemo, experimental medication, etc. As you see on the right side of your screen, there's three different levels of coverage: Prime, Advantage, and Supreme. And the only difference is the cost and how much benefit they get, depending on what they're claiming. So as you see, we've got immunotherapy, different types of chemotherapy, anti-nausea drugs, radiation, and even experimental treatment. As long as it's NCI approved, we'll give a benefit for that for up to 30 days. So some really good benefits here for your clients on that. And then specified disease critical illness, guys, I love this rider. It's a lump sum benefit between 5 and 50,000. And it's available, it says 18 to 74. It's really available 18 to 64 in California. Sorry, we didn't change that. But as you see on the right side of your screen, it covers ALS, which is Lou Gehrig's disease, coma, ESRD, major organ transplants, MS, paralysis, loss of sight, hearing, speech, or severe burns, all at a lump sum basis. And to give you guys an idea, you're probably looking at 50, low $1 a month for a $5,000 benefit, under $1.50 a month. So really, really great thing to add to our clients, you know, and again, it's a lump sum. So if they have any of this and have this rider, we don't worry about paying a hospital or a doctor. We send that directly to the insured or their beneficiary. So really great option to add, super affordable, cheaper than the Starbucks that most of us buy a couple of times a week. And now our last new rider, our accident indemnity rider. You know, slips and falls are the #1 cause of ER visits in the US each year. And as you saw with our mission, we hope people are active. We want people to be active, but what happens when people are active, they also have injuries, right? The more active people are, sometimes, unfortunately, the more injuries they have. Well, what a great opportunity to offer them accident indemnity rider. Again, 3 levels of coverage, similar to our radiation and chemo rider. And it covers things like dislocations, fractures, lacerations, urgent or ER visits, x-rays, etc., as you see on your screen. Again, this rider is great to add to anybody who is either active or maybe prone to accidents, you know. So I would talk to your clients and you know, it absolutely suggest to add this rider. And when you do, it really, again, if you're able to add some or most of these riders, really could be the most comprehensive supplemental health product out on the market today for consumers. This just gives you sort of a quick look at our underwriting now, because again, remember, it used to be 10-year. So for AIDS, HIV, and ARC, which is age-related complex, they still could never have had that. But everything else is just a regular 5-year look-back maximum. So it's a really great, pretty easy and fair to qualify for, to be very honest. But this just gives you an idea of what we're looking for based on what riders, etc., that they may buy or what base policy they may buy. And then this is where it's available. Again, I know we're talking California, but would be remiss in case some of you live on a border of another state like Oregon, Nevada, or Arizona, or you sell over the phone. I know that's more prevalent now than it's ever been. And then we'll get into really the fun part and the last part of my presentation. We're doing some incentives. Now, I do want to preface this with these vary by state, so please go to Agent View, which is agentviewcigna.com, or call Todd and his team over at Senior Insurance Marketing, and make sure what qualifies in your state, whether it's California or if you're selling in another state. But right now we're doing some lead drops. We'll buy you a lead drop for 4 underwritten cases a month, or we're doing a $100 app incentive at 5 underwritten cases. And then we're doing also, if you rate 5 sub-health apps a month, as long as they each have a $30 a month or more premium, we're bonusing another $25 an app for that. So, and those reset every month. We are going to have some of that going through AEP. Look for a new announcement coming soon from us on what the program is going to look like through AEP. It'll be similar, but not exactly like this. And then last but not least, we do a great agent trip every year. I know our friends at Senior Insurance Marketing have been on our trip, gosh, I think every year for a long time. And, you know, we do a great trip, folks. We don't lock you in a room for 8 hours a day and tell you how great Cigna is and about our products. Our agent trips are for us to break bread, build relationships, or start new ones, right? And so we want our top agents there. Some of the great things about our agent conference is we do not limit the numbers of attendees. So you don't have to worry if you're 51, 101, 151, or 220. If you write enough net premium to get the qualification credits and are in good standing, you and a guest will be invited. So how do you get there? Well, if you look at the bottom of your screen, it's $225,000 in production credits. So if you're writing Med Supp, that's a 1-for-1. So you've got to write a net of 225 between March 1st of this year and the end of February next year. If you write Supp Health, we give 3-to-1 credit for that. So that equals about 75,000. If you cross-own write some of both, don't worry. We'll combine the credits, and if you write enough, we will give you an invite. So, you know, I just really want to, I know I went fast because we had a lot of great information to come over, but I really want to let you all know I appreciate you spending what now looks like almost 45 minutes on the phone with me, learning about the great news we have in California. If you have any questions, again, Todd and his team over at Senior Insurance Marketing, they're not only an agency of ours, they're good friends of mine. I know they'll take great care of you, so reach out to them. But with that, if you have any questions, I'm happy to answer questions. And Todd, if you have anything else, feel free to hop on.
Hey, thanks, Jim. For the Medicare supplements, but also the you know, cancer, heart attack, and stroke as well too. That's a great product, and it's one to have in your toolbox. You know, during AEP and also after AEP as well too. It's you know, you can sell it anytime. Great trips and also great rewards as well too. That's going on with the leads and everything like that. It's an awesome time to write business with Cigna. If anyone has any questions, feel free to put it in the Q&A box there, and we'll be happy to answer it for you. I don't see any questions here, Jim. But hey, thanks for jumping on to the webinar today, talking about Cigna. Again, Cigna, a great company, great friends of Senior Insurance Marketing. And give us a call here at Senior Insurance Marketing, 877-800-3080, and we'll be happy to help you out with getting contract with Cigna, or if you have any questions about any of Cigna's products as well. So take care, everyone, and give us a call here at Senior Insurance Marketing. We're here to help you grow your business. Take care, everyone. And again, thanks, Jim. Appreciate it.
Yep. Take care, Tom. Bye, everyone.